Most people think about money and success in terms of certainty. They believe that if they follow a step-by-step process, success is guaranteed. But the wealthy don't think this way. Instead, they think in probabilities. They evaluate risks, outcomes, and potential rewards rather than seeking absolute guarantees. The truth is, getting rich isn't about being right all the time. It's about making high-probability decisions that increase your odds of financial success over time. The people who build wealth understand that every investment, business move, and financial choice comes with a range of possible outcomes, and they position themselves to win more often than they lose. In this video, I'll show you why thinking in probabilities is the key to getting rich, how you can apply it to investing, business, career choices, and even everyday decisions, and why shifting your mindset this way will dramatically improve your financial success. If you want to learn how to increase your odds of winning in the game of wealth, keep watching. Let's get started. This is Wealthlocity. Here you create, protect, and grow your wealth fast. Most people are conditioned to think that success comes from certainty. They want guarantees before making decisions, which leads them to avoid risk, delay opportunities, and fear failure. Society teaches us that getting rich means finding the perfect investment, the perfect career, or the perfect business idea. But the reality is that nothing in life is 100% certain, especially when it comes to money. This mindset holds people back because they wait for the perfect moment instead of taking calculated risks. They might say things like, "I'll start investing when I'm 100% sure it's a good time," or "I'll start my business when I'm absolutely sure it will work." The problem is that by the time certainty arrives, the best opportunities are gone. Wealthy people don't look for guarantees. Instead, they analyze probabilities. They ask, what are the chances this will work, and what's my potential upside versus downside? By shifting to probabilistic thinking, they can make smarter decisions with incomplete information and increase their chances of success over time. Thinking in probabilities means understanding expected value, EV, a concept used by investors, entrepreneurs, and gamblers to make high-probability bets that pay off over time. Expected value is a simple formula: probability of success, X, potential reward; probability of failure, X, potential loss. Let's say you're considering investing $1,000 in a startup. You estimate that there's a 30% chance it becomes a success and makes you $10,000, but a 70% chance you lose your $1,000 investment. Your expected value would be 30% x $10,000, 70% x $1,000, equal sign $3,000, $700, equal sign $2,300 expected profit. Even though the probability of failure is higher than success, the potential upside makes it a worthwhile risk. Wealthy people constantly think this way, ensuring that their wins outweigh their losses in the long run. Successful investors don't try to predict the future. They play the odds. They know that in any given investment, there's no guarantee of success. But over time, making high-probability bets leads to significant wealth accumulation. Take the stock market. No one can predict if one particular stock will rise or fall tomorrow, but historical data shows that investing in a diversified portfolio over decades has a very high probability of positive returns. This is why the wealthiest investors don't try to pick the perfect stock. Instead, they invest in broad market index funds, betting on the high probability that the economy will grow over time. Likewise, venture capitalists don't expect every startup they invest in to succeed. They might invest in 10 startups, knowing that 8 will fail, 1 will break even, and 1 will become a massive success that makes up for all the losses. By playing the probabilities, they build enormous wealth despite taking risks. Thinking in probabilities is also critical for business success. Most people think that successful entrepreneurs had a great idea and executed it flawlessly, but that's rarely true. Smart entrepreneurs test multiple ideas, knowing that many will fail. They understand that business is about iterations and adjustments, not immediate success. Instead of waiting for a perfect business idea, they launch quickly, test the market, and improve based on feedback. Jeff Bezos, for example, didn't bet Amazon's future on one idea. He experimented with Amazon Web Services, Kindle, third-party seller platforms, and other innovations, knowing that some would fail while others would become billion-dollar successes. By thinking in probabilities, he built one of the most valuable companies in the world. Thinking in probabilities isn't just for investing in business. It can also help you build wealth through better career decisions. Most people look for a safe job that guarantees stability, but jobs are never 100% secure. Instead of seeking security, it's better to evaluate career moves based on their probability of future upside. For example, taking a job at a small but fast-growing company might seem riskier than a corporate job, but if the company grows, your stock options or promotions could massively increase your earning potential. Similarly, learning a high-demand skill like coding, sales, or digital marketing increases your probability of earning a higher salary in the future. By assessing the potential upside of career choices, rather than just looking for stability, you can make career moves that maximize long-term wealth. Beyond wealth building, probabilistic thinking helps in everyday decisions. Whether you're buying a house, negotiating a salary, or even deciding how to spend your time, evaluating the probability of different outcomes leads to better long-term results. For example, if you're deciding whether to buy a home, you shouldn't just assume real estate always goes up. Instead, assess the probability that the market will continue rising, the likelihood of interest rates affecting affordability, and whether renting for a few more years gives you a better financial position. Wealthy people don't just follow conventional wisdom. They assess the odds, evaluate risk versus reward, and make the best decision given the available data. Thinking in probabilities is the ultimate wealth-building mindset. Instead of chasing certainty, successful people play the odds, evaluate risks and rewards, and make decisions that increase their chances of financial success over time. By applying probabilistic thinking to investing, business, career choices, and everyday decisions, you'll make smarter financial moves, avoid costly mistakes, and maximize your wealth potential. What do you think about this way of thinking? Do you already apply probabilistic thinking to your finances, or is this a new concept for you? Let me know in the comments. If you found this video valuable, hit the like button, subscribe, and share with someone who needs to hear this. Thanks for watching, and I'll see you in the next video with more money in your pocket.